In a few hours, the Federal Reserve makes a decision that could shake XRP to its core. And here's the twist nobody's ready for. It might be the best thing that happens to you all year. The whole crypto internet is bracing for a bomb. The Fed's gonna raise rates. Crypto's dead. XRP's finished. So I actually looked at the numbers everyone's screaming past. And the truth? It's almost the opposite of the panic. The smartest money on Wall Street can't even agree. Bank of America says the Fed does nothing. Citadel says surprise hike. Two of the sharpest firms alive, same Fed, same day, complete opposite calls. So somebody's wrong. And figuring out who tells you exactly where XRP goes next. But here's the part that flips this whole thing. Whether the Fed holds or hikes today, the scariest outcome, the one everybody's dreading, is the exact thing that has historically created the biggest buying opportunities in crypto history. Blood in the streets and the bottom show up at the same address. Always have. So do not scroll, because at 2 p.m., everyone else is going to panic, and by the end of this video, you're going to understand something they don't. Let's go. Real quick, straight from the heart. I'm not a financial advisor, and nothing here is a promise. Anything I say about rates, price, or a bottom is my opinion, never a guarantee. I make these videos because I believe in this space and I believe in you. So do your own research, protect your family first, and let's stay patient together. Cool? Let's get into it. Let me clear the fog first, because the panic online is built on a misunderstanding. Today, the Federal Reserve, under its chair, Kevin Warsh, announces its interest rate decision at 2 p.m. Eastern. And the crypto timeline has already decided the answer. They're hiking, run for the hills. So let me give you what the actual data says, not the fear. Here's the reality. The overwhelming expectation from the markets, from most major banks, is that the Fed does nothing today. Holds rates right where they are, in that 3.5% to 3.75% range for the 5th meeting in a row. The odds of a surprise hike today? They've been sitting somewhere around 20 to 30%. Real, but a minority bet. And a rate cut? Basically off the table for the rest of this year. So when a channel tells you the Fed is about to raise rates and nuke XRP, understand what that actually is. That's the low probability outcome dressed up as the certain one because fear gets clicks. I'm not going to do that to you. The most likely thing that happens today is not much. A hold, a steady hand. Now, why is inflation even in this conversation? Because it's still running hot, above the Fed's 2% target, and Fed Governor Christopher Waller has been vocal that inflation is now the #1 concern, more than the job market. Oil's been climbing, over $100 a barrel, and that keeps price pressure alive. So the Fed is stuck, holding a higher for longer stance. That's the backdrop. Not a cut, not easy money. Patience. So here's where folks go wrong. They hear higher for longer, and they panic sell their bags. Stop. Because knowing the Fed is on hold isn't bad news for XRP. It removes a huge unknown. The thing markets hate most isn't high rates. It's uncertainty. And in about 2 hours, one big uncertainty gets resolved, one way or the other. But that brings us to the real mystery. Because if a hold is so obvious, why did one of the most powerful trading firms on the planet just break from the pack and predict the opposite? When Citadel says something the whole market disagrees with, you don't ignore it. You lean in. Let me show you the split and what it's really telling us. Okay, this is the part that fascinated me, so lock in. You've got Bank of America, one of the biggest banks in the country, looking at this Fed meeting and saying, nothing changes. Rates stay flat. Calm, boring, steady. And then you've got Citadel Securities, one of the most sophisticated trading operations that has ever existed. The firm that sees more market flow than almost anyone, looking at the exact same Fed, the exact same data, on the exact same day, and saying, surprise hike incoming. Two of the smartest institutions alive, opposite conclusions. So what gives? Here's what's happening under the hood. They're weighing the same two things the Fed weighs, jobs and inflation, but landing in different places. The case for no change, Bank of America's case, is that the economy's stable, the Fed just wants to keep holding steady and not rock the boat before it has to. The case for a hike, Citadel's case, is that inflation is stubborn, oil is surging, and if the Fed waits too long, it falls behind. So why not move now and get ahead of it? Neither of them is dumb. That's the point. This isn't smart money versus dumb money. This is smart money versus smart money. And when the sharpest players genuinely disagree, it tells you something important. This decision is a real coin flip on the margin, and the market has not fully priced in either outcome. Which means whatever happens at 2 p.m., hold or hike, somebody's positioning is wrong. And that's exactly the kind of moment that creates volatility. And volatility, for people who understand it, is where the opportunity lives. Let me pause right here because I want to know something. Before this video, did you even know Wall Street's biggest firms were this split on today's Fed decision? Type yes or no in the comments right now. I read them personally, and I want to see how many of you knew the pros themselves can't agree. Yes or no. Go, then come right back. All right, so the Fed decides, the market reacts, but here's what nobody stops to explain. Why does a decision about interest rates move XRP at all? What's the actual connection between some number in Washington and the coin in your wallet? Because once you get this, you'll read every Fed headline for the rest of your life completely differently. Let me break it down. So let's answer the question almost every crypto channel skips. Why does the Fed matter to XRP in the first place? Here's the simplest way I can put it. Think of all the money in the world as water and interest rates as a tap. When the Fed cuts rates, turns the tap wide open, money gets cheap, it floods everywhere, and it goes looking for growth, risk, upside. That's when money flows into things like stocks, and further out on the risk curve, into crypto, into XRP. When rates are low, the water is everywhere, and risky assets bloom. Now flip it. When the Fed raises rates, tightens the tap, money gets expensive. Suddenly you can park your cash in something safe and boring and still earn a solid, guaranteed return. So why gamble on the risky stuff? Money drains out of the far end of the risk curve first. And guess what sits at the very far end? Crypto, XRP. We're one of the most sensitive assets to this entire mechanism because we're one of the last places money flows when it's brave and one of the first places it leaves when it's scared. That's the whole reason a boring rate decision can send a green or red wave through your portfolio. It's not about XRP's technology on that day. It's about the tide. When the Fed controls the tide, every boat moves, and the small, fast boats out where we are move the most. Now here's the nuance the fearmongers leave out, and it's important. Higher for longer rates aren't a death sentence for XRP. They're a headwind, a compression, a coiled spring. Because the second that tap starts to loosen, even a hint of it, even the expectation of it, the water rushes back to the risk end of the curve fast. And the assets that got compressed the hardest on the way down are often the ones that snap back the hardest on the way up. That's not hopium. That's just how the risk curve breathes. So when you understand the mechanism, the Fed stops being this terrifying monster and becomes something you can actually read. A hold today? That's the tide staying put, stability. A hike? That's a headwind, and headwinds don't last forever, because the Fed's whole job is to eventually ease again once inflation cools. Either way, you're not helpless. You're informed. And informed is how you stop reacting and start positioning. But here's what almost nobody has the guts to tell you. The single scariest scenario, the one where rates stay high, the market bleeds, and everyone's screaming that it's over, that exact moment has a name in this industry. And the people who recognize it don't cry. They get to work. Let me show you why the worst headline might be the best gift you get all year. Okay, now we get to the part I actually want you to feel. So let me turn the energy all the way up, because this is where fear turns into fuel. Let me ask you something, and I want you to be brutally honest with yourself. Cast your mind back to the last real bear market, the bottom. When Bitcoin was crushed and XRP was in the dirt and everybody was screaming that crypto was dead and buried. Now imagine someone handed you a time machine and dropped you right back there, at the darkest moment, knowing what you know now. Knowing that from that exact low, Bitcoin went on to multiply many times over, and XRP ripped multiples off the floor. Would you have backed up the truck? Of course you would. You'd run through a wall to buy at that low. So here's my question. What makes this time different? Seriously, look in the mirror and ask it. Because the setup rhyming in front of us right now, high rates, fear, blood in the streets, everyone crying that it's over, that is not the signature of a top. That is the signature of a bottom. That's what the bottom feels like. It never feels safe. It never feels obvious. It feels exactly like this. And listen, this is my opinion, not a promise, so hold it as that. But there's a reason the oldest saying in this whole game is buy when there's blood in the streets. Not because pain is fun, because pain is where the discount lives. The best prices in the history of this asset class have never, ever shown up when everyone felt great. They showed up when everyone felt exactly how a lot of you feel right now. Tired, frustrated, doubting. That feeling isn't your enemy. Historically, that feeling has been the signal. And it gets better, because the timing lines up in a way that gives me chills. This whole macro picture, a Fed that might stay tight into the fall, pressure building on risk assets. It lines up with the one rhythm that's been almost eerily accurate in this space for over a decade. The cycle. The 4-year heartbeat of this market. Every single time, it's pointed toward a reset, a washout, a bottom, followed by the run that mints the stories you hear about later. And that rhythm is pointing at a window right around the back half of this year. Same window the macro pressure could peak. Read that again. The scariest part of the macro calendar and the historical bottom window are shaking hands. So you've got two choices here. Two. You can do what 90% of people do. Panic, cry, sell the bottom, and swear off crypto right before it turns. Or you can be the person who recognizes the moment for what it is. A discount. A gift wrapped in a scary headline. Crypto is the most liquid, fastest moving corner of this whole market. It's the first thing to bounce when the tide turns, and it turns without ringing a bell. Nobody sends you a text that says, the bottom was yesterday. You only ever see it in the rearview mirror. I'm not here to tell you what to do with your money. That's your call and yours alone. But I'll tell you what I see. I see a market trying its hardest to scare people out right before the good part. I see XRP holders being tested, hard, and I see the ones who understand the mechanics staying calm while everyone else loses their heads. Fear is loud, but fear has never once in the entire history of this market been the thing that made people wealthy. Patience did, conviction did, understanding did, and that's exactly what you're building right now, in real time, by watching this instead of panicking with the crowd. So before I send you off, let me leave you with the one reframe that changes everything about how you watch that 2 p.m. announcement. 60 more seconds, because this last part is the difference between reacting to this market and rising above it. Let me bring this whole thing home, and let me bring it home loud. Here's where we actually stand. The Fed most likely holds today. The panic was overblown from the start. The sharpest firms on Wall Street are genuinely split, which tells you the market's about to move. Rates high for longer is a headwind, not a coffin. And the scariest macro window on the calendar lines up almost perfectly with the historical bottom this cycle has been pointing at for years. That is not a doom story. That, my friends, is a setup. Now I know, some of you are staring at your portfolio right now. XRP sitting near $1, and you're worn out. Tired of the sideways, tired of the red days. Tired of hearing, we're early, while the price sits still. I hear you. I've been there. So let me say this as clearly as I possibly can. The discomfort you're feeling is not proof it's over. It's the toll you pay right before the road opens up. Every single person who ever made life-changing money in this space had to sit through a stretch that felt exactly like this one. Every one of them wanted to quit at some point. The ones who didn't, they're the stories. Zoom out and look at what's actually happening around us while the price naps. Banks are tokenizing. Regulators are finally writing the rules. The biggest money on the planet is building on-chain. Airlines are taking crypto. Countries are racing to modernize. The entire financial system is being rebuilt on the exact rails this technology runs on. And XRP is sitting right in the middle of that rebuild. The foundation isn't cracking. The foundation is being poured, deeper and wider than ever, while the crowd stares at a candle and calls it dead. We are early, not late. Early. And early is uncomfortable by design. It's supposed to feel like this, because if it felt easy and obvious, the opportunity would already be gone. The discomfort is the price of admission. The people who pay it with patience are the ones who look back on days like today and smile. So here's what I want you to take away. Whatever the Fed does at 2 p.m., don't let a headline make your decisions for you. Don't let fear, the loudest, worst financial advisor there is, run your playbook. Zoom out. Stay calm. Keep learning. Be the steady one in your circle while everyone else panics, because that person, historically, is the one who wins. The pain doesn't last forever. It never does. The chapter you're in right now is the first one, not the last. And the foundation, the real, deep, unshakable foundation of this entire industry, is being poured right now, whether the chart shows it today or 6 months from now. So if this flipped the fear into something you can actually use, hit that like button, subscribe, and turn on notifications, because I'm tracking every single one of these moves so you don't have to face them alone. Drop your yes or no in the comments if you haven't yet, and tell me straight, hold or hike today? And are you fearful or are you ready? I read every single comment. Stay early, stay patient, stay unshakable. Protect your family, do your own research, and never let anyone rush your decisions. And that includes me. This has been Crypto with BHW. We're early, the foundation is being poured, and I will see you in the very next one.